Jobs numbers mixed, base metals are up, and uranium is way up. You're listening to Kitco Roundtable, sponsored by Snowline Gold. Paul Harris is back. How you doing, Paul?
Hey, Michael. Very well, thank you. How are you?
And with us is Srini Godavarthy. He is CEO of Live Metal. Srini, welcome to Kitco.
Thank you. Thank you for having me on the show.
Srini, you're definitely downstream, but we like to check in on the battery tech sector, which has been driving so much interest in metals and mining. What's Live Metal focused on, Srini?
There are two business lines for us. We are focused on developing a metal program which is non-Chinese based. So we would be, if once we are successful and scaled up, the only producer of lithium metal outside of China. And we are also trying to develop a vapor deposition process for anode production, which will help really optimize the costs of anodes for next generation batteries.
Let's talk about macro. Job numbers were released today. The headline number, U.S. non-farm payrolls rose by 187,000 in August. The monthly figure was above the market consensus estimate of around 169,000. So a stronger number, possibly meaning the Fed stays higher for longer. However, the U.S. employment rate surged, rising 3.8%, beating market consensus of 3.6% in March. June and July's employment data was also revised lower. Last checked, gold is trading in the 1930s. Base metals got a lift this week, however. China issued further measures to revive a crisis-hit property market. Worries about China's economy had been a drag on the base metals. Copper prices rallied this week, adding nearly 10 cents. Last look, copper was at $3.88 a pound. Lastly, we should give a shout out to uranium. Uranium prices have climbed 9% on the month to reach $61 a pound. And Cameco is trading at $37, a 12-year high. The coup in Niger may have been a spark. Niger contributes around 5% of global supply based on 2022 data from the World Nuclear Association. The amount is small, but it is where France gets most of its uranium to power its extensive nuclear power grid, and Niger's coup leaders are not getting along with the French government. Up next, Paul, but first our sponsor, Snowline Gold, ticker SGD on the TSX Venture and SNWGF on the OTCQB, is making waves with their focus on a district scale greenfield gold discoveries in Canada's Yukon. With 330,000 hectare land package and exceptional leadership team, they are well on their way to unlocking Canada's newest gold district. Snowline's 2023 exploration program continues to top the charts with industry-leading drill results. The latest hole returned 2.5 grams per ton gold over 553 meters at the Valley Discovery, making it one of the best drill holes ever drilled in the Yukon's territory in its 125-year history. To stay updated with Snowline Gold exploration program, visit snowlinegold.com, ticker SGD on the TSX Venture. Paul, what's those mining headlines?
Thank you, Michael. There were some rockets and squibs in the share prices this week. Lavris Gold reminded everyone why they invest in junior gold exploration stocks when its share price went parabolic and tripled after it reported an intercept of 340 meters, grading 1.09 grams per ton gold at the Fazenda do Posto discovery at its LDS project in southern Brazil. However, Chalice Mining showed the horror of under-delivering when its share price dived and lost 25% after underwhelming the market with the release of a scoping study on its Gonaville nickel-copper PGM project in Western Australia. Sticking with the uranium theme, NextGen Energy entered into binding term sheets with Queens Road Capital Investment and Washington H. Soul Patterson for $110 million financing of unsecured convertible debentures to fund further development of its properties in the Athabasca Basin of Saskatchewan. The debentures will carry a 9% coupon, a 5% turn, and be convertible at $6.76 per share, a 30% premium. NewGen's Rook I project envisions a 1,300 tonne per day mill to produce an average of 21.7 million pounds per year of U3O8 for 10.7 years, following a $1.3 billion investment. Aurora Minerals announced a feasibility study for the Borema open pit gold mine project in Rio Grande do Norte in Brazil. The mine will produce 65,000 ounces a year at an all-in sustaining cost of $949 per ounce over an initial 11.3-year mine life, generating an after-tax internal rate of return of 51.9% at $1,900 per ounce gold, following a $188 million initial capital investment. The company produced 242,000 ounces last year from operations in Mexico, Honduras, and Brazil, and aims to grow its production to 450,000 ounces a year in the coming years. Finally, Marathon Gold received confirmation from the Impact Assessment Agency of Canada that changes to the Valentine Gold project to accommodate an open pit at the Berry deposit do not require a new impact assessment. The determination sees Marathon anticipate that the Berry permitting review process will be completed during 2023 and 2024. Hosting more than 1 million ounces of gold, Berry is anticipated to produce for 9 years from the second quarter of 2025.
Now, Srini, I'd like to bring you back. Paul and myself, we're always reporting on what's happening upstream from you, and that's the investments that are going into the battery material space. Recently, there was a $100 million investment into Patriot Battery Metals from Albemarle, and you're looking at the cash cushions that some of these large lithium miners are sitting on due to the rocketing prices, and there's a lot of money sloshing around. But I'd be interested, can you kind of give us a scope of the investment that is going into a battery technology? I assume it must be skyrocketing as well.
It is substantial, right? The key thing to look at is how the next 10 years of the pathway looks like for battery technology. Today, we have close to 1 trillion watts of battery capability, 1,000 gigawatts of capability having been built up. That is projected to go up nearly fourfold by 2035. And given that they're talking up anywhere, the estimate has actually skyrocketed as well. It was in the 500 billion investment over the next 6 years to 2030. Now they're talking close to $1 trillion investment being needed, not just in lithium, but all of the other battery materials, copper, manganese, nickel, to basically every material that is required to make the battery, and for it to come together, it's going to be a substantial amount of investment. So any mining companies, whether they're upstream or downstream producers like us, we all benefit from those investments in the space.
Strategically, how do you compete in that space, Srini?
For us, the key is to work with a lot of the next-gen battery producers. We have segmented our customers into two groups. People who are targeting aviation, what we call eVTOLs, air taxis, drone deliveries. And then there's a second group of our customers who are focused on EVs itself. The key feature that the customers look for when they try to adopt or integrate our product into their battery is safety, energy density, lower cost, and of course, life of the battery. So there are like 4 or 5 features which lithium metal anodes bring in to the battery that really helps us compete with the other providers or other anode producers in the space.
Now, I think going the word of the month, the word of the year, or the word of the half year is probably decoupling right now is the word, is that cleavage that has happened between China and North America markets. How is that impacting the types of relationships that you have, Srini?
Yeah, there are two things, right? There's decoupling happening, and then there's the IRA happening as well. So both of them are very much a tailwind for our business. If you look at lithium, in general, China dominates the space. And when it comes to lithium metal, about 90% of the lithium metal today is produced in China. So if you're looking to decouple and have a source outside of China, there are very few players. I mean, maybe 1 or 2 players. And so for us, that's a huge tailwind to be able to scale up, get the capital required to really get a metal plant built in either Canada or US, a North America-based metal plant. The decoupling is a key driver for a lot of the customers. Then once you bring in the IRA, there's a requirement to use material produced in North America, which helps the next generation battery customers of ours to really look at LI Metal as a key supplier of products.
Thank you. Dr. Srini, one of the battery metals that doesn't get a lot of attention, doesn't get a lot of press, is graphite. And that's basically the whole anode at the moment, isn't it? And about a very large, about half of the overall battery. But with your technology, that will make lithium anode would make, or silicon anode, that would make graphite sort of irrelevant, wouldn't it?
It wouldn't make it irrelevant, right? Look, metal is not going to replace graphite right away. There's a lot of capital that has gone in the OEMs. They're very risk averse. They're not going to switch tomorrow, right? For anybody building a new battery line with new technology, it's a drop in. But if you're thinking about an existing battery line which uses graphite anode, they'll have to put a lot of capital to retrofit that facility, and usually that does not happen right away. It's going to take a little bit of time for that change to happen.
Okay, how advanced is the development of the lithium anode? When can we expect to see those commercialized?
Very good question. There is a lot of misconception in the industry where people have thought to go from graphite to lithium metal, you have to solve the problem of the electrolyte, and you need solid state electrolytes to be commercialized. What we have realized in the past 1 year or so is there's a huge acceleration in liquid electrolytes that work well with metal anodes. As a result, quite a few of our customers are talking about scaling up to gigawatt scale, 20 gigawatts, 30 gigawatt factories by 2026, 2027, which has really pulled this technology forward by about 4 or 5 years. What we thought would be large commercial scale in 2030 now looks like will happen in 26, 27. And we are seeing a substantial uptick in the demand for these products, even on a qualification scale, that we are actually building out a commercial facility coming online next year to be able to service all our next generation battery customers.
Thank you.
Srini, it's always a complex space to understand, but I think the two driving factors are just if you can reduce cost and energy density.
Energy density, both are very valid, but I would look at it in a slightly different way, right? The key aspect is what we call gravimetric or volumetric energy density, right? It's the energy density per kilogram of material. Using anodes boosts that, lithium anodes boost that energy density, but we are already innovating to take the weight out of the current collector and other materials that are used in anodes to give it a further boost. So it's not a single step. It's going to be 2 or 3 generations of products which really boost that gravimetric energy density. A key example of this is aviation industry, where for them, you need really high gravimetric. Today, batteries are maybe 200, 220 watt per kilogram. The aviation industry is targeting 400 to 450, doubling the energy density. Lithium metal gets them nearly there. On a cost basis, it is the lifetime cost of the battery. So a key aspect that comes in addition to the cost, is how many cycles the battery can last. With demand for fast charging, with the demand for like aviation, the battery tends to deteriorate faster. So it's not just cost, it is how many cycles the battery can deliver. Those are the 2 key factors. And a third factor is, of course, safety, which is on every consumer's mind, is am I sitting on something that will catch fire, and how to avoid that and overcome the safety needs, get it to a higher safety standard.
The other theme that it seems to run through on the battery tech sector is always the talk of some type of substitution. Is there going to be some type of tech that is going to come out regarding this? But the way it's explained to me from analysts is that this sector is just growing so large that there's going to be unique applications for all types of materials and all types of batteries, especially when you look at, I always use my acronym on this, but the ESS, the energy system
Yes.
storage
Yeah.
trend right now with, helping out with grid power.
Yeah, I mean, look, there is always talk of sodium batteries. CATL, one of the Chinese players, is commercializing them. But again, like I said, gravimetric energy density is the key. Lithium is the lightest material that can be used. Sodium is about 4 times heavier than lithium. So, in applications that are non mobility, you definitely have a possibility that sodium can come in and be successful. But when you talk about EVs or aviation, it's going to be a huge challenge to have anything replace lithium pretty quickly. You might have alternate technologies, but they might be a decade or so later. They're not threatening mobility sector in the short term.
Let's turn to our number of the week. Guest goes first. Srini, what's your number?
Look, the number that I love is 10. We talked about graphite. Lithium offers about 10x the capacity that graphite can offer. So by switching out graphite, you have a huge improvement. Like we talked about, a 2x in energy density because of the capacity that lithium brings.
Paul, you promised us a big number. I've got a big number too, but we'll hear yours first.
Mine is 100 million, or $100 million to be exact. That's the value per year in carbon credits that European oil company Shell said it would no longer be purchasing due to lack of carbon offsets that meet its quality standards.
My big number is 3. That is 3. Look for Kitco Mining at 3 conferences in September. That's the 2023 Precious Metal Summit, Beaver Creek, Gold Forum Americas, and a Fast Markets European Market Raw Materials. So that's Paul and I. They're going to be running to Beaver Creek, Colorado Springs, and Amsterdam. Please drop by and say hi. Srini, any news or any milestones over the next 12 months at LI Metals?
Several milestones. One of them that I mentioned is we will be bringing a commercial scale machine for anode production online to service quite a few of our customers who are going through qualification, either in the EV space or in the aviation sector. In addition to fund these, we will be launching our fundraise in the next couple of months, which will help us fund this commercial facility. We expect to lock in, once we announce this commercial machine, a few customers that we hope to announce publicly that they have come in and have partnered with us for the next generation anodes, which I think will be instrumental for the entire industry, because people have been questioning lithium metal anodes, and once there is confirmation that several big players have come in, I think the industry in general will start to accept that lithium metal anodes are here, and it's their time already.
Follow me at Michael McCrae on Twitter, or X as you prefer. That's McCrae with 2 C's. Paul is at Paul Harris Gold. Srini, how would you like people to get a hold of you?
My email at LI Metal, which is s.godavarthy at limetal.com.
On behalf of Srini, myself, and Paul Harris, have a pleasant weekend.